Yo, Ben, every time I take a trade, it's like, the market stopped me out. What should I do? Don't worry, I got you, right? Let's go. Yes. Listen. I'm going to show you guys the things that I always do before I take a trade, okay? There's like 5 things I always do before I take a trade, and I want to show you guys right now. So let's waste no time, let's go. So the first thing I like to do is I like to check the news. So let's go to forexfactory.com. I go to calendar, right? And pretty much what I do is I look to see if we have high impact news. So you see how we have red folders? I'm just looking for the USD, all right? The time that I trade, okay? So today, we have non-farm payments. So today is April 4th. So right here, okay, this is the high impact news, and we have non-farm. So I know, okay, around 8:30, I have to be careful if I trade around that time, okay? Even though I don't trade around that time, I still want to know what's going on. So I know just in case, I have to be careful. So that's the first thing I do. I check the news before I take any trade because I don't want any surprises when I'm in a trade. Now, the next thing I do before I take a trade is I look at the direction. So let's go on the chart. I'm gonna show you guys what I do. So right here, okay, I only look at the 5-minute chart, okay? Now, I know your favorite guru will tell you, hey, look at the daily chart first, look at the 4-hour, look at the 1 hour, then drop down to 15 or 5-minute. Go ahead, you can do that. I'm not saying there's nothing wrong with that, but me personally, since I trade one market, okay, just looking at one time frame is good. So right here, all I'm looking for is the structure of the 5-minute chart, okay? So right here, the 5-minute is going up. So that's all I know, okay? We are in the uptrend. I'm looking for, possible opportunities at the 5-minute levels, and that is it, okay? So I'm looking for the direction on a 5-minute chart before I take the trade. And when it comes to the direction, guys, you really have to be, on point. Here's a good example. Let's go to the chart. So right here, okay, you would say to yourself, man, the market is bullish. I need to go long, right? I need to participate in this long right here, okay? But if you don't look to the left, okay, let's look to the left. What do we have, guys? A lot of selling right here, okay? Even over here, a lot of selling. So this is why you have to pay attention to direction, because just because a market is going up doesn't mean that the market is going to continue. Look to the left. Do we have some type of resistance in a way? You have to always check that. So that's why before I take a trade, I have to know these things, okay, before I take the trade. Now, the next thing I do before I take a trade, guys, is I mark down my levels, okay? I mark down support and resistance and supply and demand. So let me give you a good example. All right, so I'm marking down my levels, guys. I'm marking down my levels on the 5-minute chart. Remember, I'm only looking at the 5-minute chart, marking down my levels. Okay, we have, support right here. We have support right here. Okay, I'm marking down my levels, guys. So when the market comes to these levels, okay, we can basically take some trades. So I'm marking down support, resistance, supply and demand levels at the 5-minute chart. So when it comes to those levels, I'm prepared. Okay, I need to mark down these levels before I take a trade, because it gives me a visual guide on where big players participated in the past. So I have to understand, okay, these are levels I need to look at. Now, I want you to understand one thing about levels. There's nothing special about a level. Yes, I said it. There's nothing special about a level. There's nothing special about support and resistance. There's nothing special about supply and demand. There's nothing special about fair value gaps, order blocks. I don't care what level, Fibonacci. It doesn't matter what level you look at, okay? The most important part, believe it or not, is actually direction, what we just talked about earlier, okay? So here's a good example. Let's go back to the last example. So right here, okay, we have resistance. So if you didn't get the direction right on this one, and you think all of a sudden, right, the market is bullish and you want to buy, and we are at resistance right here, and you say, oh man, look at this support area, okay? Let me go long right here. And you get stopped out, or you say, oh man, on a 1 minute, it's a fair value gap right here. So let me go long right here. You get stopped out. So it doesn't matter what level you look at, guys. It doesn't matter. Fibonacci, I don't care what it is. There's nothing special about a level. The level gives us a visual guide on where big players might participate. Keyword, might. There's no guarantee that a big player will participate at these levels. They might participate at these levels, okay? So we had to mark down these levels. So when price comes to these levels, okay, we have to see how the market reacts to those levels. And that's the next thing we're going to talk about. So the next thing, before I take a trade, I have to look for a confirmation, okay? So let me give you a good example. So right here, guys, right? Let's say we have supply right here. I don't want to just say, okay, we have supply right here. When the market comes to this supply right here, let me just go short. I don't want to do that, guys. Okay, that is not my style. I know I see a lot of people do that. Okay, I don't know if they still do that nowadays, especially dealing with this type of market that we are in. I don't know if these guys are still doing this, but let's say we have supply, and as soon as the market comes to the supply, they get in and they're looking for the reward. Now, again, there's nothing wrong with this. There's nothing wrong with this. If it works, go ahead. There's nothing wrong with that. But what I like to do is I like to look for confirmation. Okay, so instead of just blindly just going short just because we are at a level, I like to look for maybe a couple of reactions at a level. So right here, let's say at support, okay, we have 1 and 2, okay, 2 bounces. So to me, a double reaction at a support level is great because sellers try to sell 2 times, guys, and they can't. So 1, 2. So that's first a good confirmation. Another good confirmation is when you have a lot of selling, and then all of a sudden you have a green bar wiping out that selling. Okay, so right here we have a lot of selling right here, and then all of a sudden that green bar just wipe out that selling. Okay, so to me, these different type of confirmations are very good. Okay, even just getting in when you see a nice solid bar. Okay, nice like green bar closing right at its high. Okay, that's another good confirmation to get in. Okay, because now you see buyers basically being very aggressive, right? Very aggressive, closing right at its high, right, for that quick scalp. So that is another way for confirmation. Okay, and also we have wicks. Okay, if you see wicks going on, that's another good confirmation to get in the market. So you can actually have multiple confirmations. You can not only just look at one confirmation, you can have multiple. Some let's say for example, one trade might show you a green bar wiping out a strong red bar, or the next trade might show you just maybe double confirmations. So you can actually have maybe multiple setups in your toolbox. But the key is to just wait for a reaction when the market gets to that level. Okay, not just blindly buy that level because we are at the level. Just wait for some type of confirmation. I don't care what confirmation you wait for. At least it's something that's showing you, okay, boom, buyers are in. Even if you read the tape or read level 2, whatever the case is, something that's showing you buyers are in the market. Okay, now I need to get in. So this is what I do before I enter the trade. Now, the last thing I do before I enter the trade, okay, this is very important, is I have to know where I want to put my stop loss at. Okay, so you might actually put your stop loss too tight, and that's why you probably getting stopped out. Okay, so in my opinion, it's best to put your stop loss below, okay, the setup, because if it goes below the setup, in my opinion, most likely that setup is invalid, right? It's not working anymore. So a good example is, let's say you want to go long right here. Okay, so to me, if it goes below anywhere around here, all right, most likely the market doesn't want to hold up no more, right? So if it keeps going like this, most likely you're wrong anyway. So you might as well just keep your stop loss below here. Okay, good example. Another good example is, let's say you went long right here. Where you want to put your stop loss? Well, you can always put your stop loss below the setup, which is right here, or below. You can even go wider if you want to, but understand, if you go wider, you're going to definitely kind of mess up your risk to reward. But let's say you go along right here and you say, all right, I like this level right here. Let me put it below this level. Okay, because if it goes below this level, I know for a fact I'm wrong. Okay, so you could do something like that. Okay, so you could do it below the setup bar or below a swing low or swing high, just in case you want to give yourself room. But again, remember, if you use a wider stop loss, you're going to mess up your risk to reward. Okay, so to me, what I like to do, sometimes I like to go with a tight stop loss, even though it's a possibility I can get stopped out, but the rewards will basically wipe out my losers when I do win. Okay, so these are the things I do every single day before I take a trade, because I want to make sure that when I take that trade, I'm okay, number one, with the loser, because we all know that we are going to lose. So I'm okay. So I'm saying to myself, okay, if this trade is a loser, I'm okay with that. Okay. And the second thing is, I just want to be prepared before I take a trade. If you're not prepared before you take a trade, guess what? Of course, the market looks like it's going to stop you out all the time. So just being prepared before you take a trade And being prepared before you take a trade, it's just gonna make you, have more confidence, and also it's gonna make you be okay if you do take a loss. You're like, you know what, it's okay. I took a loss. It is what it is. But at least I was prepared before I took that trade. And I believe a lot of traders are not prepared before they take a trade. They don't even look at, the things that we talked about today in this video. So if you are looking at these things before you take a trade, man, you are on your way, okay? Even if you are not seeing success now, just keep doing these things. You are on your way to be a profitable trader. So thanks a lot for watching this video. I appreciate it. And until next time, I'll talk to you guys later.